welcome to Stockscores Investing. This is a lesson module in the Getting Started area of the Stockscores Education Center. In this video, I'll discuss how to manage your retirement portfolio with the Stockscores approach. The overview, we're going to start by explaining the Stockscores investing concept. I'll explain a little bit about how to measure performance, and then we'll go into a discussion of the economics of trading and investing in the stock market. I'll demonstrate the process that I use for finding stocks to buy, and we'll talk about the components of the Stockscores approach to investing. Finally, I'll explain how you can become a Stockscores investor. All right, let's get into the Stockscores investing concept. It's important to understand that most stocks, most of the time, are not worth trading. Not because stocks are necessarily bad, but what we want to do is find those stocks that can beat the market. You know, if you simply want to earn what the market earns, which historically is an average of about 7 or 8% a year, all you really need to do is go out and buy an exchange-traded fund that is based on the performance of a large group of stocks that make up the market. For example, you could buy the S&P 500 index by buying the ETF, the S&P Spiders, which has the symbol SPY. And over time, you will earn what the market earns minus a little bit of a fee for the company that manages the ETF. Well, I'm not interested in being average. I want to beat the market. We call that trading alpha, finding the stocks that are moving quicker than the market. So if in a given year the market goes up 8%, I'd like to find that stock that goes up 20%, 30%. Well, I have found some unique characteristics of those market-beating stocks, and the key to finding them is taking a focus on abnormal activity, abnormal buying behavior, abnormal price action, abnormal volume behavior. And once you do that, and once you learn the simple rules that I can teach you, you can start to pinpoint those stocks that have a high probability of outperforming the market. Now, whether you are a long-term investor looking to hold a stock for many years, or perhaps a little bit more short-term, someone looking to hold a stock for weeks or months, the key is always that focus on abnormal activity. Now, investors often make the mistake of thinking that the only thing that is important when investing is the buying decision. That's really not the case. There's more to investing than just buying the right stock. You have to also manage risk, preserve your capital, know when to exit the investment, and really overcome your emotional attachment to money. It is that emotional attachment to money that will make you make mistakes in the market. So what we want to do is find those market-beating stocks, and by focusing on abnormal activity, and I'll show you this in just a moment, you'll start to see that these stocks can really move faster than the market. Now, I've done a considerable amount of research over the last 25 years, and I have found that the great majority of market-beating stocks start their upward trends with abnormal activity. But not all abnormal activity leads to these big price moves. So this puts us into a little bit of a conundrum. If we know that market-beating stocks start with abnormal activity, that's what we want to focus on. But if we also know that not all abnormal activity leads to a market-beating trend, we need to have some other metrics, some other filters that can help us really focus in on the stocks with the best potential. So what I have done is combined this concept of abnormal activity, and again, I'll show you that in just a moment, with some other analytical methods so that I can trade the stocks with the very best potential. Now here's an example of the kind of stock that I'm talking about. This is a stock listed on the Toronto Stock Exchange, Bankers Petroleum. On the left-hand side of the chart, and this is a 3-year chart, where each bar, each candle on this chart represents a week of trading. So back in July of 2011, the stock was around $8, and for the next year, it really did quite poorly. It moved down all the way to $1.50, before finally stabilizing through 2013. And then in the middle of 2013, it really started to outperform. Well, that's the kind of stock that I want to own and the time that I want to own it. I want to own it when it is outperforming. And there's some very simple signals in this chart that will help you do that, and I'll touch on those in a moment. Here's another example, Altice Group. You can see through most of 2012 and 2013, money invested in this stock was dead money. The stock wasn't going anywhere. That's the kind of stock that I really want to avoid. It wasn't bad, but I don't want to own a stock that does nothing but trade at the same price month after month after month. It's not making me my market-beating profit. It wasn't until July of 2013 when this stock really started to outperform. And you can see that from July of 2013, the stock moved from about $9, $8 to $9, to $24 just a year later. Well, how would you know that it was the time to buy that stock in July of 2013? That's what the Stockscores Approach is all about. Now, before we look at the tools of Stockscores and the concepts for finding these things, I want to talk a little bit about how we measure performance at Stockscores. Now, typically an investor will say, hey, I made 12% on a trade, or I made $1,000 on that investment that I just did. And those are okay metrics, but they really don't capture the important factors in determining long-term success in the market. You see, you must measure your gains and your profits relative to the risk you take. You know, it's not a great investment if you make $1,000, but your potential loss was $2,000. You've earned a reward that is only half of the risk you take. So therefore, we want to judge our performance using this concept of reward for risk. We want to measure our success over a large number of trades. We don't want to judge what kind of an investor we are based on the success or failure of our last investment. We want to judge our success 10 trades at a time, 100 trades at a time. And if we can consistently earn more reward than the risk we take, well, then we don't even have to be right all the time. Can you make money by being wrong more than you are right? Yes, absolutely you can. The key is to maximizing the reward for risk that you earn on a trade. Well, let's get into the economics of how this works. Suppose that you do 10 trades and 6 out of 10 times you actually lose money. And only 4 out of 10 times you make money. Now, if you were a student in school, you would be getting a losing grade. You're only achieving a 40% success rate. But think about it this way. What if your average loss was only $500 while your average gain was $1,500? How much do you make or lose after you've done just 10 trades? Well, let's go through the arithmetic. If 6 times out of 10 we lose $500, well, then we've suffered, after 10 trades, $3,000 in losses. But on the 4 times that we are right, we make $1,500 on each investment. Well, now we've made $6,000 in profits with $3,000 of losses, giving us a net gain of $3,000. And we're not even right all that often. We've made a net gain after 10 investments because our reward is greater than our risk, even though we are not right more than we are wrong. The key to investing successfully is to take small losses and have big gains. See, something about the stock market is this. You cannot predict what the stock market is going to do all of the time. It's not a science, it is an art. You know, if you put a glass of water in the freezer, you know, based on simple physics, that that water will freeze because the temperature in your freezer is below freezing. But in the market, it doesn't work that way. You can't say, if I buy a stock with the following conditions, it will always make me money. It just doesn't work that way. And anyone who tries to tell you that they have a set of rules that is right 100% of the time in the stock market, is trying to sell you something that simply is impossible. I have been investing in the market for 25 years, and I have never seen a strategy that is right 100% of the time. What we can do, however, is trade strategies that have a positive expected value. We can trade strategies where if we do them over and over again, they will make us money. Now, in this particular case, our strategy is right only 4 out of 10 times, but it makes us money because it has a positive expected value. Now, typically when I am trading or investing, out of 10 trades, I expect to have 2 bigger winners with a reward for risk of 5 to 15, 4 to 5 losers, and maybe 3 to 4 smaller winners. Now, what do I mean when I say a reward for risk of 5? Well, if I risk $1,000 and make $5,000, then I've earned a reward for risk of 5. If I risk $100 and make $1,500 on the trade, then I have made a reward for risk of 15. And so in the group of 10 trades that we might do over a certain time period, I expect 2 relatively large winners. 20% of my trades will be the big winners. And then I'll have 4 or 5 small losers and 3 to 4 small winners, where my reward for risk is somewhere between 1 and 4. Well, it tends that the small winners and the small losers tend to balance each other out, and my profitability ultimately comes from latching on to those 2 or 3 big winners that come along every once in a while. Now, the key to making this work is having the patience to ride those big winners, letting them make me the maximum amount that they're capable of making, and that is really where my overall profitability comes from. So, when we are looking for trades, what are the key things that we look for in trying to find those stocks that have the highest probability of making me those big profits? Well, it really comes down to predictive chart patterns. Now, throughout the Stockscores Education Center, you will see videos on my methods and my approach. You'll see some that talk about chart analysis, some about our tools, some about how to read chart patterns, some about how to manage risk effectively. At this point, I'm just trying to give you a broad overview of the Stockscores approach to investing. But the basic concept is we want to buy stocks that are showing those predictive chart patterns that after 25 years of research I have found have an expectation for strong profits. Now, the basic criteria are stocks breaking out through resistance, from low volatility, from optimism, and we use the Stockscores indicators to help us find those things. Now, again, elsewhere in the Stockscores Education Center, there are videos on what a breakout is, what low volatility is, what optimism is, and how to use the Stockscores indicators. But I'll just jump ahead a little bit and show you how that all came together in this particular stock. Now, this time on the left, you can see that this stock was in a downward trend. That means the sellers were in control, and it's a stock that we want to avoid. Then the stock went into a sideways trading pattern, which is neutral, and it is important because it was building a base of confidence for the market to build off of. Now, right here, the stock broke through a resistance level, and it did so from a predictive pattern, something we call an ascending triangle. Now, we also found in that particular week that the stock made the kind of stock score indicator move that we look for. Now, the Stockscores indicators are a fairly sophisticated indicator made up of a dozen different factors, and they will jump up when the stock does what we look for. You can see that the Stockscores went to a new high at that point, and the stock was breaking from a predictive chart pattern, and in the months that followed, that stock doubled in price. Another example, here again, you can see that the stock was pretty boring for some time, trading in a very tight, boring range, but then the stock came to life here and here. And that's when our Stockscores indicators jumped up to tell us that, hey, something's going on in this company that is positive, something that is going to make this stock outperform the overall market. Now again, it broke from a predictive chart pattern, with good stock scores indicators, and that allowed the stock to go into a market-beating upward trend. The stock more than doubled in a year. So the keys are that we use the stock scores indicators combined with simple chart pattern recognition skills that I teach in the different modules and lessons in the Stockscores Education Center. And when you put all that together, you can then focus in on the stocks that have the best potential. Now, there is also the importance of having a process for finding these. You know, I can put this chart in front of you today and say, hey, that was a great stock, but that doesn't do you much good today because it's already happened. You can't make money based on hindsight. So we need to have a tool and a process to find these stocks as they happen. And that is why I built Stockscores.com. It has some charting and market scanning tools that allow us to search through the entire market looking for stocks that meet the criteria of the Stockscores strategies. Now, you may be an investor looking to capture yield and not take a lot of risk, or you may be a little bit more risk tolerant and be looking for stocks that are going to give you significant capital gains. Ideally, we like to find both. A stock that pays you to own it, which is the yield component, and a stock whose price goes up over time at a market-beating rate so that we can capture those capital gains. All right, so I'm in the Stockscores website now, and I've got this tool available to me to scan the market. This is called the Market Scan tool, and it is available to members of Stockscores.com. Now, I can set these filters up in many different ways to try and find the things that I'm looking to find. I could search the American stock exchanges only, looking for stocks that pay a yield of at least 4%, but no more than, say, 10%. A stock that has a sentiment stock score of at least 60. Maybe I'm interested in stocks only between the price of $5 and $20. I might want stocks that are breaking through 80-day resistance, and I might want stocks that trade at least 500 times a day. Now, I have just created on the fly a market scan. Now, when I click the market scan report, it goes through every stock that trades in North America and finds that none of the stocks met those criteria. So I might want to loosen up some of the rules. I could take out this breakout criteria and now search. Let's see if that finds anything. Hey, now it's found 14 stocks that meet those criteria. Now, I just made up a market scan on the fly without much consideration of what might work. What we have also done on Stockscores is created for you preset strategies that we teach in the different lessons of the Stockscores Education Center. So for example, if I'm looking for a stock that pays a yield and has a good potential to do well, I might run the Stockscores Simple Weekly and turn on the fact that it pays dividends, click on Market Scan Report, and now it went through the entire market and it found the 38 stocks that meet those criteria. Now the next step is I select all and I view these charts one at a time or 10 per page, looking for the kinds of things that I have found are good predictors of where price is going to move. Now, it's not the purpose of this video to teach you what those things are. I just want to give you an overview of the process. I go through charts. When I see something I like, I might maximize the size of the chart. There's specific things in these chart patterns that I am looking for. So for example, way back here in May, this stock met the criteria of the Stockscores Simple Strategy. And over the course of the next month and a half, the stock made a pretty good gain. Now, it also met the criteria 3 days ago, right here, when it broke out from a predictive pattern. So what allows the market scan to put these stocks in front of me are the filters that I have asked it to look for. And really what we do is provide you the expertise to know what to scan for given the different things that you want to achieve. If you're a longer-term investor looking for stocks that pay yield, you're going to be doing a very different market scan than a short-term day trader who wants to find stocks that have a good potential to be volatile over the next few hours. So there's very different ways that you can use this tool. The Stockscores Market Scan has the flexibility and the power to go through thousands of stocks in the blink of an eye to give you that list of prime candidates. Now, there's a number of different components to the Stockscores approach. First, we need a strategy, a set of rules for when to buy, when to sell, how to manage risk, and how to manage emotion. The strategies are taught in the Stockscores investor component of the Stockscores Education Center. And if you go to the Stockscores Education Center, you can see the investor lessons and strategies on that page. In addition to the strategy, you need a little bit of skill. So the foundation component of the Stockscores Education Center will teach you the chart reading skills, the risk management skills, the emotional management skills necessary to apply the strategy. You also need a process. So when you do the investor course, you learn the processes to combine with the strategy rules to capitalize on these opportunities. Now we need tools. The Stockscores Market Scan is the most common tool that we use to identify opportunities. And then of course we also need the emotional control and discipline. Now emotional control and discipline you would think is simply a function of the person making the decisions, but there are some tricks that I can teach you to help you be emotionally controlled and to have the discipline to do things well. It doesn't have to take a lot of time. A lot of people think that managing their portfolio has to be time consuming. I've got strategies that you can apply 15 or 20 minutes a week, 15 or 20 minutes a month even, to find those stocks for your portfolio that will help you get to retirement that much sooner. Now, of course, you also need capital, and with capital comes the responsibility for capital preservation. If you lose your money in the market, you are out of business. And so the central component of all of my strategies, of all of my processes for finding opportunities, of getting to the point where you are managing your own money, it's all about capital preservation. We don't want to be gamblers. We want to have a set of steps that we're going to take to acquire the skills necessary to manage our money properly. All right, so those are the different components of the Stockscores approach. Now, let's say you want to become an investor, a self-managed investor. There's two paths you can go down. The first path is the one that I did. I figured it out myself. I spent years, and literally years, 10, 15 years, learning how to read charts, how to manage risk, how to manage my emotions and stay disciplined. I then went out and developed the tools. I've spent hundreds of thousands of dollars developing the tools on Stockscores.com. I have spent thousands of hours developing the processes and the strategies that I share with the members of Stockscores.com. And after 15 years, I'm able to not only have a good deal of success in the market myself, but share that with other people. And that's really the second option, is you can complete the Stockscores Investor Training Program and really save yourself a lot of time, a lot of money, and a lot of frustration. It is not hard to learn how to invest in the stock market because investing is actually pretty simple, but it is not easy. If you want to figure it out yourself, as I did, great. That's for you to decide, but just recognize that it won't happen overnight. It takes a long time, a lot of work. I've learned all of the lessons already. I did it all the hard way. I've paid a lot of tuition to the stock market university, if you want to call it that. And really the Stockscores Investor Program is all about saving you that frustration, saving you the time that it took me to get there, and the inevitable losses that I incurred trying to get there. So if you would like to learn more about the investor program at Stockscores, there's a couple of things you can do. First, go to stockscores.com/learn. There's some information on that page with some videos and some insight into how the investor program works. But certainly you can email me directly. I deal with all of my students one-on-one. You can email me at tylerb@stockscores.com. Ask me all the questions you want. We don't do high pressure sales at Stockscores. We want to help you decide if the investor program is right for you. Now, I encourage you to keep looking through the many different videos and lessons and modules found here in the Stockscores Education Center. There's all kinds of information. And if at any time you have some questions, again, email me, tylerb@stockscores.com. Well, I hope you've enjoyed the Investing the Stockscores Way module and video. If you want to learn more, please let me know how I can help.